Hi everybody, welcome all of you to my new video on basics of economics or introduction to microeconomics. The question is, what is economics? Economics is said to be a science which studies human behavior as a relationship between ends and scarce means which have alternative uses. Or we can also say it is the study of how people use their limited resources to fulfill unlimited wants. So we all have unlimited wants, but the resources to fulfill them are limited. And therefore, we have to make a choice. The first definition also says it is the relationship between ends and scarce means. Ends are our objectives. What are the things we want? And the means or the resources are scarce. Like you have certain amount of pocket money. With that pocket money, you want to go to movie, eat in a restaurant, buy books. So you have n number of objectives or ends, but the pocket money or the money with you is limited. For the economy as a whole, the resources are physical resources like land, labor, capital, and organization. But for the economy as a whole, the wants are unlimited. Like the economy may want to establish a school, a hospital, or a company. So there are large number of wants, limited resources, and therefore we have to make a choice. And that's where our basic economic concepts comes. There is scarcity, the resources are scarce, and therefore we have to make a choice. And whenever there is choice, there is a question of opportunity cost also. Now, the question is, what is opportunity cost? Opportunity cost is defined as the next best alternative or the second best alternative that is foregone or sacrificed. Like if you are working in a company getting salary of 30,000, you might have got an offer from another company also with the pay of 25,000. Then the opportunity cost of this job is the 25,000 which you have sacrificed. Like you have taken admission in MBA over here, the opportunity cost is the job which you have sacrificed. Or maybe you may be interested in doing MBA from somewhere else, then that is your opportunity cost. So next best alternative, which is sacrificed or foregone, is nothing but the opportunity cost. Now, every economy has got three basic economic problems. The first is what to produce. What are the goods and services to be produced in the economy? Whether to produce more of luxury goods, more of comforts, or more of necessities. The economy has to decide whether to produce more of cars or more of two wheelers, or maybe more of cycles, bicycles, what to produce. Now, the second question is how to produce, whether to use more of automation or more of labor intensive methods of production. So, whether to use more of capital or more of labor, which method to use, and for whom to produce. Again, this is related to the first question, what to produce. Like if you are producing luxury cars, more of luxury cars, it is for the high net worth individuals, ultra rich, those who are ultra rich. If you are producing more of two wheelers, it is for the normal public in India. More of small sized cars, then they are for the middle income group people in India. So what to produce and for whom to produce are in fact interrelated. Now, how these decisions are taken, it depends on the type of economic system you have. Like if it is capitalism, what to produce, how to produce, and for whom to produce is decided by the market mechanism of demand and supply. If for any product demand is high, then producers will decide to produce that, because when the demand is high, they can sell it easily, they can charge a higher price, so more of that good will be produced. How to produce also is also decided by the market. So if labor is expensive, producers will produce using more of capital. If capital is expensive, then they'll produce using more of labor. Like in India, labor is cheaper, so maybe the more labor intensive goods will be produced using labor intensive technology. But in America, where labor is scarce, or in Canada, where labor is scarce, more of capital intensive techniques may be used. And for whom to produce, again, depends on what is the income level of large number of people. Like if there is more demand for bicycles and two wheelers, then automobile companies will produce more of that. If there is more demand for smaller cars, like in countries like India, there will be more number of smaller cars available. They are produced for the middle income group of population. And if there are large number of rich people, then high-end cars will be produced like in America. So under capitalism, these decisions are made using the market mechanism or the market forces of demand and supply. It is based on the market. The opposite of capitalism is socialism. Under socialism, it is decided by whom? It is decided by the government or the central planning authority. Central planning authority will decide what to produce, how to produce, for whom to produce, with the help of planning mechanism. Or we can say it is decided by the government, because central planning authority is by the government. So government decides what to produce, how to produce, for whom to produce. All the industries are under the government, owned by the government or owned by the state. There is no private property under socialism, and therefore these decisions are also made by the state. And then we have mixed economy. The typical example is of India, where we have the government ownership also for the companies, as well as there is private ownership as well. So the decisions on what to produce, how to produce, for whom to produce is on both government as well as the private players. So private players will decide on the basis of demand and supply, on the basis of market mechanism, but government will decide on the basis of the requirement of the economy. Like Indian Railways, which is getting huge losses, it is still continuing. Most of its losses are in the sleeper class, but still it continues with the sleeper class because it is required for the economy. So the decisions are made on the basis of the requirements of the economy by the state, by the central planning authority. In case it is in the public sector, that industry comes in the public sector. In case it is left to the private sector, then private sector decides on the basis of demand and supply. Next, we have production possibility frontier. And this part of the syllabus I will continue in the next video.